they do bring in people that you would think would know better. And so because the people that you would think would know better are in these deals, the average person thinks, well, it got to be a good deal because the people that I've been programmed to think in society would know better, they're also in these deals. So you saw the same thing with what's the guy's name that ran the big SEC scam with the investors? Well, first, he had a position in the SEC. So he had all the credentials, he had all the accreditations. Then he attracted money from people that were also very wealthy. And you would think those people would have the team around them to see the fact that this was a scam. But they couldn't, because the way these large things work is they're able to convince people that you think would know better. And then what the average person does, and they say, well, this accredited investor says it's a good investment, it must be a good investment because the accredited investor, the guy that's accredited in quotations, thinks it's a good investment. Well, it must be a good investment. So if we can fool those people, we definitely can fool retail. Let's go to the next slide. So the narrative, used car prices are up, therefore Carvana is a good investment. That was the narrative. But used car prices are up because of a situation that's happening on a world level that's not going to last forever, right? And it's really not, it's not going to last forever. It's still going on, but our perception of it is going to change over time. The pandemic hasn't gone anywhere, but our perception of it and how we should respond to it wasn't going to last forever, right? So because those conditions were not going to last forever, we knew the prices could no longer support themselves over time. You weren't going to be paying 26% higher for a used car year over year over year over year. It's not sustainable. Let's go to the next one. How do we sell these type of ideas to people? Right? So how do we sell this idea that we have something different and it justifies these share prices, even though our business structure is really that our goal is to sell you a loan using a car. It's really all it is. It's a very simple business. I sell you a loan using a car. The dispenser that you see off the highway, they got a real nice one in Atlanta. I haven't seen the one out here in Houston. They got one in Orlando too. That used to be close to my house. The website, all of that, got nothing to do with their business model. Those are ancillary to how the business actually makes money. The big Pez dispenser with the cars, that doesn't make them any money. It's a marketing piece, and it doesn't drop profit. It's just something to look at. It's like brand awareness marketing. So how do we sell this idea? We just say tech, tech, tech all the time, right? We say tech, tech, tech. We say disruptive. We say scale. We say value capture. And that's how we make people believe we have something, because we've been programmed through media that think that people that speak a certain way, they use really grammatically correct English. They speak without an accent. Like I have a very thick accent. They speak without an accent. They have this very flat kind of WASP Anglo-Saxon accent. And they use these words to make us think that there's something there that doesn't exist, because we've been programmed to mean that these words are something, right? And so that's how we sell these people on these ideas, when in reality, the business model is that we just sell loans to people using cars, right? And so then that makes people believe that we have something, and so that's something that a lot of people fall victim to that I don't, because you can't come to me and say tech 30 times and say disruptive and scale and value capture and tell me that you're an angel investor and that you're a venture capitalist. None of that means anything to me. Because my question is, what's the business model? How do we make money? Right? Then I'm going to do a SWOT analysis of the business model so I can understand what's the strengths, weaknesses, opportunities, and threats to the business model. No matter how hard you try to sell it, none of that means anything to me. Right? Let me show you another thing that's done to people. New narrative. Carvana is an extremely well-constructed pump and dump scheme. That's my narrative. I still believe that narrative, right? Carvana is an extremely well-constructed pump and dump scheme. Extremely well-constructed. Takes pros to construct this, right? The average person can never figure this out, which is why they can get caught up in it, because they can't even figure out how to construct this type of pump and dump scheme. It's beyond their ability to comprehend. Very, very well constructed. Takes professionals to do this type of job. Let me show you what I'm talking about, right? So the goal of this scheme was to be so well constructed it could fool people who are educated and certified, which then will persuade retail. So we talked about before. Am I against people being educated and certified? No, I'm not. I want you to be educated. That's what you want to do. I want you to go do it. If you want to go get a certification, I want you to go do that too. But educated and certified people get sued every day for malpractice, right? Do I want people to be licensed? Definitely. Licensed people get sued every day for malpractice. They get sued every day for negligence. They get sued every day for conflicts of interest. Happens all the time. Okay? A lot of people is in prison right now. They felt like their lawyer screwed them over. Same lawyer that passed the state bar. Happens every day. Right? But because of the way we've been socialized, if you believe that a person has certain educations and credentials, you believe that they know something that you don't have the ability to know. Not they know something that you don't know. They know something that you don't have the ability to know. That's where you start downgrading yourself. See, and once they can get you to buy into that, they got you. Not to say that you should be arrogant. I was never a fan of these guys that like to get on the internet and say they know more about law than attorneys that have studied and passed the bar. You don't know more about law than them. They have experience in the space. But you can learn what they've learned if you're just willing to put the time in. Now, you won't get the experience, but you can actually go read the same books they've read, right? But this idea that a person can't be questioned on what they're saying because they passed the test and they went to school, therefore I can't question anything about what they say, is how you get these situations like Carvana, which are designed to pull money out of the public markets as a liquidity pool. That's all this is liquidity draw, right? That's all this is. Because the only way to make a lot of money is to hit a place where there's a large amount of liquidity. I can't get out of a deal at $30 million if I can't find a liquid enough market. So what do I got to do? I got to take this thing public. Let me go to the next slide. So we talked about before, you need a team of lawyers to do this. You probably need some really, really good CPAs, because you can't do this with run-of-the-mill people. So you got to surround yourself with professional people to structure this so you don't go to prison at the end of the day. Because when all of this is over, nobody's going to go to prison. The way they structured it out and the way they rolled it out. Nobody goes to prison when this is over with, right? Because you got to do it the right way. So the guy that did Nicola, he did it the wrong way. That's why he got a Fed case. But if you do this the right way, nobody goes to prison. So you got to get with professional people that can show you how to structure this the right way so you don't go to prison. That's why you get the educated and certified people, right? That's what they're used for. Now, what's interesting is that the educated and certified people, they're not going to make as much as the Garcias made, but they got more education than the Garcias. That's how you leverage the educated and certified people. See, people, I could give a whole class on that. You leverage their education to make you wealthy because they don't really know how to make money. They just know how to sell their services to you. The Garcias know how to make money, right? They know how to make money, right? So they leverage the education ability and the knowledge and the expertise of people that are certified and credentialed to make them billionaires. And the people that taught them how to compose it, they're not going to be billionaires when this is over. But that's a whole other conversation about leverage, right? So that's the Garcias, the son and the father. Father started Drive Time. He started Ugly Duckling, turned it into Drive Time, and then the son started Carvana. So it's a family affair. They're billionaires right now off Carvana. They was already rich or wealthy going into the deal. They're billionaires. I never got to do nothing the rest of their life. In fact, their grandkids probably never got to work, ever. Right? They just pulled this much money out of the public markets. And what they were lucky that the pandemic happened when it happened. Because it's because of the pandemic, the share price went like this. So they just got fortunate. They had the right company doing the right thing at the right time, and they were smart enough to know when to get out of the deal. They didn't try to hold on to see if it went to 1,000. When they got around 300, they started pulling all their money out. Let's go to the next slide. Now we want to talk about again, everybody being certified and credentialed to get people to believe in that they have something that they don't have. Garcia went to Stanford, right? Mark Jenkins, CFO, went to Wharton, one of the top business schools in the country, went to Stanford. The co-founder chief brand officer went to Harvard. Co-founder chief operating officer went to Harvard. Chief product officer went to Stanford. General counsel went to Harvard, right? So like I said, general counsel went to Harvard. You can't, I don't know the name of the firm is on there, but the slide is not really in high def. So they have the team put together to make you believe we got a bunch of people that know what they're talking about. This is how this works. Because I got to get you to believe in them, so then whatever comes out of our mouth, you won't question it. Well, you don't get the '08 housing crisis without people that came out of Harvard, without people that came out of Wharton, without people that came out of Stanford, but most importantly, Harvard, Wharton, most of the Ivy League schools. Why? Because the average person don't even know how to construct certain type of deals. They don't get taught it at their school. So I went to a state school. We got schools of finance there. They don't teach you how to construct deals the way they're going to teach you how to construct deals at Wharton. It's a different type of school. You'll get a good finance degree, you get a good accounting degree, but how to construct these type of deals, you got to go to an Ivy League school. So some of our biggest financial, the S&L scandal, all these scandals, if you go and research who was involved in it, it all goes back to Ivy League colleges, where they teach them how to do this type of stuff. Really, really complicated deal structure, where you can embed these things and hide these things, and at the end of the day, nobody goes to jail, right? Because it's legal, but you got to know how to compose it the right way, right? So this is how they get over your apprehension. We create a lot of positional authority. We do a lot of prestige badges, because why? We got the who's of American colleges on the team, right? My question is, what was their experience in the used car space? Outside of Garcia, who came out of Drive Time? Zero. So what do they know about used cars? But this was never a used car deal. That was never the deal. The deal was never about used cars. Because when you talk to used cars guys, who knows what school they went to, they just got experience in the used car business. But if we want to take a used car, we want to convince the public that we're going to take the used car space, which is a space that does not have any continuity. There's no company, I think, even controls over 10% of used cars inside America. Most used cars are very small, independent operators. They get their cars from auctions, they bring them back to the lot, they try to sell them. You do got the CarMaxes, you do got the Drive Times, you got the Carvanas, but Carvana tried to sell us on the fact that we're going to be able to essentially to get a large piece and control a large piece of the used car market inside the United States. But in reality, they just was a loan deal. They're just a loan furnisher. That's their real business. But if you don't look at their documentation, you won't never know that. Let's go into the next one. So Carvana provides financing on 80% of the cars it sells. It securitizes these loans to sell to keep a certain percentage on the books to create revenue stream. That's really, really important, right? So 80% of the cars that they sell, Carvana provides its own financing. So they have their own finance arm that's embedded in this particular portfolio of companies that provides the financing. They securitize those loans to sell, and they keep a certain percentage on their books to create revenue streams. So they sell certain loans, get money up front for those. The other ones they keep on their books, what does that do? Creates revenue stream. So now we still got revenue coming in because the average person that drives those cars still got to service those loans. So now when you look into the actual chat, you see links to the securitization documents, right? You see the links to that. I don't know why I keep losing the screen. You see the links to the securitization documents in the actual chat. So if you want to go look at those, go look at them. So this is all the research that I do to understand these type of deals, right? This is all I do. So while everybody's trying to find the next Instagram scammer and this, that, and the third, I could give an F. Why? Because I'm not going to get paid off that. I'm trying to figure out opportunities in the market that are going to pay me. Because if I get good enough at this, as I get more and more capital, I can put 50,000 in a play like this and pull 400% out. And I'm done. Y'all go do what y'all want to do. And that's the goal. Because the market produces these type of scenarios. They're never going to stop happening because the environment that we're in, it facilitates this type of situations, right? Let me go to the next one. So when you're looking at the books of Carvana, one thing you got to understand, we're looking at total shareholders equity from 2021 to 2020, right? My bad, from 2020 to 2021. How do you lose almost 100% million in stockholder equity in 10 months without an equity raise or a dividend? But on television, analysts are raising the price of Carvana, telling me they got a good business. But when I look at their documents, they're losing 100 million, almost 100 million in stockholder equity in 10 months. No equity raises and no dividends. So why are we losing equity? So then why would I buy into this deal? It's over a 10-month period. We lose almost 100 million in stockholder equity. But the narrative was that this was a great investment. Let's go to the next one. So then they wanted to acquire something called a DESA, right? And so this is where we're going to stop because I want to get into these arguments because, like I said, this is a very complicated scheme. It's not binary. It's not, if women just got married, everything in the world would be great. It's not binary like that. If, people that believe these type of binary solutions, they can't make money in these type of deals. Why? Because it's still got a lot of moving pieces to it. You got to be able to think in a non-linear fashion. You got to understand there's more than one way to skin a cat in these type of deals, right? So let me show you a article. We're looking at Carvana's loan business, right? Carvana's loan business had investors impressed since August 17th, 2021. Carvana approaches its loan business differently than other auto lenders, right? Carvana, unlike other auto lenders, packages its auto loans and sells them to investors. Carvana does not hold on to the debt, which enables us to see an immediate gain on the vehicles that purchased with cash. So what did I tell you before? This is a loan business. It's not a used car business. Their goal is to sell you a loan and then securitize that loan and then keep a certain percentage on the books to drive revenue. The car is just the bait to get you into the loan, right? Carvana sold more than 100,000 vehicles in the first half of the year and sold $3.1 billion in loans to securitization trusts, which is double the amount of loans it sold in 2020. Why did it do that? Because we had a lot of liquidity in the economy and the cost of cars went up. So if the cost of cars goes up, the loan goes up. Next article. Ernie Garcia, right? Ernie Garcia in April 2022 bought a lot of Carvana stock. So shares of Carvana are down more than 30% since the company reported earnings on April 20th. For the first quarter, the used car seller reported its first drop ever in quarterly sales. Carvana sold more than 100,000 cars during quarter one. Meanwhile, its net loss tallied at $260 million, up from a loss of $36 million in the prior year-to-year period. So what do we talk about? $260 million loss, up from a net loss of $36 million. And people were still giving stock upgrades to this particular company. So Ernie Garcia bought into it. According to a Form 4, Garcia purchased a whopping 5.1 million shares of the company. Garcia purchased the shares at an average price of $80. In total, the purchase amounts to $408 million. Out of the 5 million shares, 3.4 million were purchased directly by Garcia II. The remaining shares are purchased through trust in an investment firm that Garcia is affiliated with, and then you get the names of those irrevocable trusts, right? Garcia's recent purchase contracts with his massive sales last year in September 2021, he sold over $36 billion of Carvana. In an annual report, the company also stated that the interests of the Garcia parties may not, in all cases, be aligned with our stockholders' interests, right? So Garcia parties, which is associated with this business, they're telling you that their interests may not be aligned with shareholders' interests. Why are you buying into this particular deal? Now we're going to go back to this ADESA deal. They needed to raise capital to make this ADESA deal. So ADESA is like this used car auctioneer. They're pretty much all over the country, even though I've never seen them. But they are nationwide. They wanted to add this company in. So let me tell you a strategy that you do in business, right? What you can do in business is if you have a business that is not profitable and you don't like the revenues, but you have money in the actual company, or you can get capital, we can buy a profitable business. That profitable business now makes my balance sheet looks better because I'm able to take their profitability and merge it into my particular company, right? ADESA has a decent business. They're way better than Carvana. So that's what Carvana was looking to do because they got to make this look good until we can 100% get out of this deal. So what do? We go now buy ADESA, but we got to figure out how to get the capital to buy ADESA because we can't buy with cash inside the company, and we're also carrying a large amount of debt. So what do? We try to do first an equity raise or a bond raise. So here's what we talk about. Carvana revamps $3.3 billion junk bond in effort to lure buyers, deal to fund acquisition of ADESA's used car auction business, right? So the company dropped $1 billion of preferred equity chunk and increased their debt portion by the same amount to $3.2 billion, according to a person knowledgeable of the situation. So the move was already fueling angst against the firm's existing creditors. Carvana has 5.265 notes due 2025. They're some of the worst performers on the secondary market. The new financing package could add more than $225 million in annual interest expense, doubling what it paid over the previous 12 months, according to Bloomberg Intelligence. So I want you to understand something. Carvana already was not a profitable company. I don't know where it is at in this slide. I don't have it. I thought I had the fact that um, over the course of their whole history, they had 1 quarter of profitability, right? Every quarter, their free cash flow was negative except 1 quarter. The issue with this ADESA acquisition was that you're already negative from an EBITDA standpoint, earnings before income, taxes, depreciation. I forgot what the A is. You add ADESA, but you got to take on debt to add it on. The problem is that the revenues from ADESA are not going to clear the debt you got to take on to acquire it. So what do you do now? You just further increase the negative free cash flows in this particular company, right? So why would this be a good deal? It's not. I just got to keep the ball rolling a little bit more so we can get the public to think we have something to bring the stock price up, because Garcia bought in for 80. If he can get out for 100 or 120, that's a great return on his investment, and we can keep moving this money around. So you got to understand that when I see that they're doing this, why do I buy more puts? Because I know there's nothing there. There's nothing here. This company's going to go bankrupt, right? But it's not going to hurt them to go bankrupt because they've been able to pull so much money out of the capital markets during this time. It doesn't matter because they can go bankrupt. They can reorganize. They can buy the cars back for pennies on the dollar. But the actual company that services the loans is a totally separate company. That company's not going to go bankrupt. So the parent company's still going to have the revenue from the loan packages, still driving revenue into the company. So Carvana, which is part of a portfolio of companies, can go bankrupt. It doesn't matter. So they can go, they can restructure, they can go through a liquidation. It doesn't matter because it doesn't impact the other companies based on the way this particular deal has been structured out. Right? Next article. They had to go to a company like Apollo to get 1.6 billion junk bond lifeline. Why? Because they put the deal out and they couldn't get action on the deal. Did I go over this already? Yeah, my bad. I forgot about this. So following those particular changes, the deal for the bonds had to go to 10%. Eventually, they were talking about giving 11% yield. So you're a company, you issue out a bond, and investors are telling you, we want 11%. Then they had to issue other provisions in there to make sure people were confident in buying their bond. Why? Because they're taking on so much debt, and we don't believe in the future that it's very likely they have the revenues to service this particular debt. So I'm taking on so much risk, I want 11%. That's a very, very high cover bond. So this is a high yield junk bond that they're putting out just to try to generate the capital to buy ADESA. So what they did was they was able to get Apollo to give them some of the money. They was able to get some of the money from Garcia II and then other parties. But when JP Morgan put this deal out the market, nobody bid on it. And so you got to understand is that the bond market sees straight through what they're doing. So they say, yeah, we'll take on the deal, give us 11%. And there was another provision in there that if they go bankrupt, they can't get out of the bond agreement. Right? And that's what I want you to understand. When you can look at these particular deals and understand what's actually going on, there's an opportunity for a lot of profit.